Hi dear traders, the Bank of Canada raised the key interest rate by 50 basis points instead of 75. This fact boosted speculations about a slower key interest rate hike by the Fed. It is highly likely that on November 2, the Federal Reserve will hike the benchmark rate by 75 basis points. However, in December it may raise it just by 50 basis points. In our video review, we'll find out what other events will shape traders' sentiment ahead of the publication of the FOMC meeting results. On Monday, traders will get information about business activity in China's manufacturing sector. Analysts suppose that the indicator will remain unchanged. However, in September, experts at the National Bureau of Statistics of China recorded a rise above the 50-point threshold that separates contraction from expansion. According to the forecast, the indicator should leave dropped. This time, the real data may also be ahead of projections. Otherwise, traders will start selling off the national currency of Australia, which is China's main supplier of raw materials. On Monday, traders may also start selling off the euro amid the Eurozone GDP and inflation figures. According to the preliminary estimates, in the third quarter, the Eurozone economy will stagnate due to a negative dynamic in household spending, which is the main driver of the region's economy. The upcoming energy crisis is making people save money. What's more, high consumer prices and expensive loans caused by high interest rates are leading to lower consumer activity. Notably, waiting for the Eurozone inflation report, analysts unexpectedly provided optimistic forecasts, saying that inflation may slacken to 9.6%. However, some experts are less optimistic and foresee a rise to 10.1%. Notably, yesterday, the European Central Bank hiked the key interest rate by 75 basis points to curb soaring inflation. The regulator also announced its intention to raise the benchmark rate even more. On Tuesday, the market sentiment will be snapped by the rate decision taken by the Reserve Bank of Australia. At the previous meeting, the RBA surprised markets and raised the benchmark rate by only 25 basis points instead of 50. Then, such a decision, like the one taken by the Bank of Canada, was defined as a possible slackening of the key interest rate hike by the Fed. On Tuesday, Australia's monetary authorities are expected to increase the interest rate to 2.85% from 2.6%. Although the regulator intends to push inflation to its target levels, it should also take into account the current economic conditions. In this light, traders are likely to show a mixed reaction. Thus, the Australian dollar is likely to decline, whereas the US dollar may also face a massive sell-off amid the expectations of a slower pace of monetary policy tightening by the Fed. Data on the ISM manufacturing PMI may also lead to the greenback's sell-off. In October, the indicator may show a slower rise. Expecting the FOMC meeting results, traders are likely to focus on the report that will disclose the current situation in the US labor market. Thus, on Wednesday, experts at ADP will report their number of employed people in the non-farm sector. According to the forecast, the indicator will rise less than in the previous period. Notably, this report is published before the official data from the US Labor Department, which is due on Friday. Judging by the non-farm employment, traders may predict the main employment trend in October. Later on Wednesday, the Federal Reserve will announce its rate decision, which is the main event of the upcoming trading week. Analysts are expecting a rise of 75 basis points. What's more, traders have already priced in these results. That's why traders' sentiment is likely to be influenced by the press conference. The Fed will disclose its plans for further changes in monetary policy. If markets' predictions about a slower tightening come true, the US dollar will be sold off. These events will be in the limelight among investors in the first half of the new trading week. And let me remind you that you may learn all the latest news from our daily reports. Stay tuned.